Well, Wall Street wrapped up the week on a strong note, and technology stocks were once again leading the charge. Hey everyone, it's Friday morning, June 19th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. Yesterday, investors reacted positively to the signing of the interim peace agreement between the United States and Iran. The agreement officially reopened the Strait of Hormuz to commercial shipping and eased concerns about disruptions in global energy markets. As a result, oil prices remained relatively stable. Brent crude traded around $79 per barrel, while West Texas Intermediate held just above $74. On the stock market, the Nasdaq Composite jumped nearly 2%, making it the clear winner of the day. The Standard & Poor's 500 gained around 1.1%, while the Dow Jones Industrial Average added roughly 0.3%. At the same time, investors continued to digest the latest Federal Reserve meeting. While the Fed left interest rates unchanged, several officials suggested that another rate hike could still be possible later this year. That reinforced the idea that rates may stay higher for longer. Economic data offered a mixed picture. New unemployment claims came in slightly above expectations, but they were lower than the previous week's reading, suggesting that the labor market remains relatively resilient. And one final note. Today, Wall Street will be closed for the Juneteenth holiday, meaning yesterday marked the final trading session of the week for U.S. markets. So, we'll be focused on Asia and European markets today. So, a strong day for stocks, easing tensions in the Middle East, and investors still trying to figure out what comes next from the Fed. Alright, that's it for today's Capital Markets Quickie. If you found this helpful, hit subscribe and stay in the loop. See you tomorrow morning.